Welcome to the Rigatoni Capital podcast. It is the morning of April 7th, pre-market. It's chilly on Wall Street, but very sunny. So that's why the stock market isn't crashing like crazy. You would think that the markets are really selling off strongly due to the headlines we were getting overnight that the negotiations with the Strait of Hormuz, Iran, and Trump not going so well. And then we had Kharg Island heavily bombed last night, allegedly. Iran's railway infrastructure has been getting bombed. Tehran had a lot of video footage come out last night of the bombs over there. And it looks like that we got this true social from Trump that says that the whole civilization will die tonight. A whole civilization will die tonight, never to be brought back again. I don't want that to happen, but it probably will. And then he goes on to talk about a total regime change is needed and everything like this and that, right? So definitely no taco involved at this time, but there could be a last minute negotiation, of course, or some kind of deal, of course. And stocks are trading as if the worst is behind us in terms of the U.S.-Iran war, in my opinion. If it weren't, then we would be heading well close down to that S&P area, which was, what, 6,300, 10% correction, if you can see here on the video. So, you know, we're only down like 0.5%, if that, right now, pre-market. My opinion is if we continue to see a sell-off today, I mean, I would be very surprised that we even get to like, maybe we're down 1% or something. I just don't think that it's going to be easy to get back down to this 10%, 6,300. But, you know, who knows? Maybe we do bomb the shit out of Iran and tomorrow the market continues its sell-off towards this 10% correction. We don't try to predict the market here at Rigatoni Capital. We're really just interested in maybe is an American Express an opportunity yet? And is this a once in a lifetime buy for a financial institution, blue chip type of name like an American Express? Is this the time to enter into an American Express? Is Goldman Sachs trading at a attractive price? Well, I would say no. It's now at $861 per share. It was a lot more attractive at $779 per share. Is the NASDAQ 100 becoming attractive? We're at 585. Well, I would have liked it better at 555 per share. NASDAQ 100 could be trading at 538, which is the previous high of the February 2025 timeframe. So far away is the broader market from Liberation Day this time last year. I mean, we have come so far in broader market indexes and just stocks in general. You know, there's certain stocks like Amazon, Bitcoin, a lot that I own that really haven't done much if you look at a longer chart time frame. You know, a lot of the Mag 7 continues to consolidate. And look, this might just not be the year for the Mag 7. This might not be the year for large mega cap tech. And I have no idea when SpaceX and potentially an OpenAI, when these companies IPO this year, if they do, I mean, I just don't know what that does to the entire mega cap tech space. You know, who knows? So Wall Street Journal did a great article yesterday that looks at the comparison of OpenAI and Anthropic finances ahead of their IPOs. So I posted on Substack a few of these charts, which is illegal because remember, this is from Wall Street Journal. You need a subscription, which is like $8 a month or something. Yearly AI model training costs. They show you OpenAI versus Anthropic. Obviously, OpenAI projects way more in terms of training costs and in terms of shares of revenue costs, a profit in billions yearly. I mean, OpenAI is going to be in the red for so many years leading up to 2030, and then it looks like all of a sudden they tip the scale, right? They tip the scale in 2030 magically, and whereas Anthropic seems to be, we're not really losing that much profit as much as compared to something like OpenAI, and then we kind of tip the scale a little bit earlier before OpenAI, and then our trajectory looks a little more conservative. So my whole point to my post on Substack was like, God, I would buy Anthropic instead of OpenAI. Gun to my head, if I had the opportunity to buy two of the businesses, I would use Anthropic more so not because of these charts. I mean, look at yearly revenue by segment, mostly because I'm not an enterprise using Claude. I'm using it for more so like everyday tasks for everything in my life, including Rigatoni Capital, including my business. But I am still like, my business isn't paying for Claude, so it's not really a business account. So I'm not part of the enterprise segment right now. But I'm telling you, I canceled my ChatGPT on Sunday because I realized I was still paying a monthly subscription for ChatGPT. I'm like, why am I still paying for this? So I finally canceled, and I've been on Claude since, I think, even before Opus 4.5 came out. So it's been at least a few months I've been hooked to Claude. Claude is night and day compared to ChatGPT in terms of what I'm getting out of it. But God, so it is a biased remark that I would buy Anthropic just because of my own situation. Okay, guys, so let's move on. And free cash flow and billions yearly, I mean, Anthropic looks like, a more conservative type of option here in terms of free cash flow versus OpenAI. Good post, good visuals. As always, Wall Street has unbelievable visuals. I'm guessing this is from Wall Street Journal. So guys, let's move on. JP Morgan, Jamie Dimon sent out his annual letter, which is a fan favorite for all of the investors across the globe. We just eat it up. Well, more so the media eats it up. A lot of what he does in the annual letter is give the risks and the tailwinds and the headwinds. And pretty much he wrote what I wrote on Rigatoni Capital on why I didn't buy the dip last week. I wrote a post on Substack that said why I didn't buy the dip. And these are the 5 main concerns that I have. And, I just wrote his annual letter before he wrote it out. So you could have just came on Rigatoni Capital Substack and read what my concerns are. Now, of course, he'll mention something like the AI disruption story. In fact, I think Studio Innovation on Substack said something along the lines that Jamie Dimon's annual JP Morgan letter has a section on AI, and here are the 5 key quotes. So I don't know if this is about the AI disruption story per se, but he does have some very good takes on AI as a technology. Like, you can see that he's bullish AI, and he thinks it's going to be a productivity boost. And that's all I need to hear to say, yeah, Jamie Dimon, I like your take. Now, when you hear Jamie Dimon's take on something like, he calls it crypto, quote, crypto, he obviously is either hiding that he understands Bitcoin as a technology, or he does not understand Bitcoin as a technology. So he lacks the understanding of Bitcoin, which is okay. I mean, how many smart people, important people in the world don't, even Elon Musk doesn't understand Bitcoin that well. They're just not interested. It's not that they can't understand it. They're not smart enough. They just haven't gone down the rabbit hole like we've gone down the rabbit hole. But Jamie Dimon's annual JP Morgan letter has a section on AI. I'm not going to read this to you, but really like his takes. I definitely think that he understands AI fairly well. He has a good vision on AI. I like his takes on AI. I can't remember because I read this last night if he brought up AI disruption as one of his large risks. I just don't know. But like everything else, let's see here. His larger risks pretty much break down the geopolitics, no brainer, supply chain issues with the Strait of Hormuz and the war in Russia, Ukraine, and the war in Iran, high global sovereign deficits and debt. Pretty much for someone like him, it sounds like he's more interested in the debt to GDP ratio, which makes sense. High asset prices and very low credit spreads. A household net worth as a percentage of GDP is now 560%. Trade 2.0, he still has tariffs as a pretty large headwind or risk. US and China relations, pretty much he says the exact same thing I said that I've been talking about. And then, of course, private credit. But it's my opinion, guys, that the private credit story is mostly a AI disruption software story. Is it not? Is it not? Am I misunderstanding something? I guess it's a little more complicated than that, but I thought it really the biggest problem is stemming from private investors that own these businesses that they can't get out of their position, like something like a Harvey, which is the lawyer LLM SaaS type of business that hasn't IPO'd yet and probably will never IPO now. And then, of course, U.S. military and American empire, just kind of saying how he's impressed by the U.S. military and he believes that is what keeps us safe, keeps the United States like the number one superpower due to the amazing military that this country has and the technology behind it and everything. And, you're kind of shaping up a scenario where if this war does end, which I don't think it's going to end anytime soon, where, the victors look like the Palantirs of the world and Anduril, and those type of companies look like the strong investments, and you'll see, people saying they'll be looking back and saying, "Oh shit, Palantir kind of helped us won this war, and so did Anduril. They came in and they helped us win the war." Maybe that's possible. I don't know. It's just a thought process I have that like Silicon Valley will look like the victors after this all wins. Is victors the right word? They're going to look like the winners. That's what I'm trying to say. Like it's setting up for this scenario where US tech wins again. It's like they can't keep getting away with this, and US tech continues to win, and then you see the Mag 7, go on this another leg up or something. I'm just saying this is a scenario that I think about. Not sure if it's going to happen like that. I'm not sure if we're going to see US tech be hot and sexy again, but I mean, would you be surprised if it does? Learning, investing, thriving. This is Mark, who is posting on Substack a lot lately. I guess he has only been on Substack for like a few months. He talks about episode 11. That's his title: How Tech Companies Decide to Make Money and What It Means for the AI Race and Your Portfolio. I suggest reading this. Again, it's learning, investing, thriving. More so for people that are learning about investing, or they're maybe they have a little bit of experience of investing. I mean, even I got something out of it because I think that it's a good reflection time to think about how, sorry for scrolling, making everybody dizzy. I just thought it gave a good, how I took it is that it gave a good recap of where we are in the AI disruption story, and how it says how tech companies decide to make money. I mean, I think it just explains to you like the mindset of these private and public stocks that are AI stocks, and like what their mindset here is, and how they envision the future. And if you know how they envision the future, it will make you a better investor. It may allow you to be a little more suspicious to buy something like, some kind of SaaS company today that you don't think has a moat, right? So annual recurring revenue, ARR, has always caused investors to put a premium on that stock price. I mean, you have such a strong ARR like Netflix, you trade at a higher valuation. So when these old SaaS ARRs continue to look good, earnings after earnings after earnings, and all of a sudden the stock is dropping, it's because the market's not valuing ARR in these type of companies like they used to. It's because you can have ARR that looks great, but if you don't have a moat, that ARR doesn't really matter anymore. Does that make sense? If you have no more growth, these are the seat-based licenses, or I can cancel my subscription and make my own app and do my own thing on Claude and just have it and just code it to death and replace what I have. Now, of course, there's the argument that you'll never be able to replace a Salesforce because of legality and these big corporations, and you can't just do that. You can't just get off of Microsoft. That's true, but you still have an investor base and a market that's suspicious on why would these companies need to be valued this high then? If something like Claude can eventually do what it does, it causes the SaaS type of business to rethink the whole way they model their business. So huge disruption. AI disruption story is huge, and it's not talked about enough. I think it's such a big deal. But, people, it's more interesting to talk about the Strait of Hormuz right now. So my point is the AI disruption story is going to come right back if this US-Iran war fizzles out a little bit in the headlines. Okay, so I wanted to also show you, I've been talking shit on Microsoft as a value, as a stock to buy right now, but Qualtrim notes like, hey, their cybersecurity business is crazy large. Remember, Microsoft is super diversified in terms of their segments and KPIs. I've shown you in the last few episodes like why Microsoft how they make all their money. It's not just because of this Microsoft 365 SaaS business. Of course, Azure is the big one, but there are these other little segments, and I discussed LinkedIn and the gaming revenue. And then, of course, they have the cybersecurity revenue that generated $37 billion in revenue, over 12% of total Microsoft revenues in 2025. I don't have any information on their margins here, but it notes that revenue is larger than CrowdStrike and Palo Alto combined. So yeah, I completely agree with this. Completely thought like, oh shit, like I kind of missed this whole aspect. This is important. But I think a lot of the cybersecurity revenue is tied into somebody that gets locked into Microsoft 365 or Azure, and there must be some kind of situation where Microsoft kind of pushes you to go to this cybersecurity business. It's also hard to find in the segments where the cybersecurity business is coming from. I mean, I thought we looked at it the other day on fiscal.ai. We didn't see it, did we? Okay, just wanted to note that. Also, Anthropic has signed an agreement with Google and Broadcom for multiple gigawatts of next-generation TPU capacity coming online starting in 2027 to train and serve frontier cloud models. Pretty big deal for Google. I don't know if the stock did anything. That's Google and Broadcom stock, but it's a big deal. Okay, I'm going to play you something. We're switching back to Bitcoin now. The Iced Coffee podcast had Grant Cardone on the show. Grant Cardone is a real estate guy. We know that. He's all about cash flow. But he definitely likes Bitcoin. He's a Bitcoin advocate. He's in the Bitcoin community. I have listened to Grant Cardone numerous times talking about Bitcoin, and I like his mindset when it comes to Bitcoin. But when he's asked this question about like, what's your bull case on Bitcoin? I think that he understands it. He just kind of fumbled on the answer here, and that's okay. I'm just want to kind of show you what he said for a brief moment, and then kind of say how I would have described it. Not like I'm any better than Grant Cardone, but I'm trying to show you like how I would answer this question.
Bitcoin
I
as
don't
like
know. I don't know.
Bitcoin-backed dollar, or what are like the main bull cases that you have for Bitcoin?
Well, there's a number of things. I think that the technology, I think I underestimated that the internet will one day send video, or that the three of us would sit around and then you guys would clip a video and then other people would clip a video and then we'd end up with 30 different pieces of video that would live into the future forever without a movie production studio. I never imagined that would ever happen. And I think that we're not imagining what's going to happen with the blockchain and with Bitcoin. I think mortgages in the future will be tied to Bitcoins, that a Bitcoin on a single family home residence, rather than buying PMI insurance, which is garbage product worth nothing to the mortgage holder, the insurance insuring the mortgage against the guy that gave the mortgage to make sure it gets paid, that $200 or $400 a month you're paying, that would be a much better investment for all parties if that was $400 of Bitcoin in the future, because it'll be a store of value that will increase as we print more paper.
For sure, and that's a possibility, but I'm curious in terms of what your bull case is right now for Bitcoin. Like, what integration do you see with Bitcoin where it makes sense that will actually be the future? Because that's sort of like a speculative, like, if this, then that, but there is no like evidence at the current moment of Bitcoin sort of doing that.
Yeah, a store.
Great follow-up question. That would have been the same exact follow-up question I would have had. I don't want to hear the speculative bullshit blockchain. Every time someone says blockchain, not interested. I think that if that works out, that there is pegging, this and that to the blockchain through Bitcoin, I think that's great, but that's not the bull case. That's not why I own Bitcoin. So let's hear what else he says.
Store value is good enough for me.
And he gives the correct answer here. He says store of value is good enough for me. That is the correct answer.
That's fine with me. I don't need, I invest in real estate because I believe it's a store of value and it retards against inflation and the printing of money. Property values go up if you print more money. Concrete costs, labor costs, everything goes up. So I'm trying to convert a piece of paper, fiat paper, into something more that is resistant and will become more valuable in the future. I wouldn't invest in NVIDIA. It's not what I do. I don't trade paper for paper. I'm not going to trade a piece of fiat for another fiat run by other companies. Okay. The third part of the bull case for me is with Bitcoin, I don't have a chairman. I don't have any competition. I don't have employees there. I have no payroll. I have no.
This is what he should have led off with. Unfortunately, he didn't. So he loses the person that's kind of intrigued by Bitcoin. I wish he would have led with this, right?
Plumbing, no roofs, no HVAC, no property taxes. I have pure technology. So the basis of the future of it is the technology of money. I don't think we go back to gold. I'm 68 years old this month. I've never bought a piece of gold, never had anybody offer me gold or silver for that fact for any of our products. I have had people offer us Bitcoin for the last 13 years for our products and services.
Why do you think gold has gone up so much then?
Well, because I think people are scared right now. I think people see the US dollars.
Okay. I don't want to spend all time watching this section. I do recommend the iced coffee hour with Steph Graham and his other friend here. I forget his name. So I'm in Grant Cardone. One important aspect of the discussion is like, why is gold going up and why is Bitcoin flat over the last 4 years? You know what I mean? And he's saying, well, it's because boomers. And yeah, I don't know. I think it's just because central banks around the world choose something like gold because it's definitely a like he says, it's been around for 5,000 years, and it's just such a large market cap, that why would you buy something volatile and much smaller, which is Bitcoin in this scenario? So, my only thing I would do in that discussion is like, hey, yeah, but if you look at what if you type into your LLM of choice and try to work at it, meaning like you go back and forth with your AI LLM and kind of drill it to death to give you some kind of I guess some kind of sheet that shows you the characteristics and the advantages and disadvantages of gold versus Bitcoin. It's my opinion that most people my age, I'm 42, will look at the advantages and the disadvantages as what is the best form of money, and they'll choose Bitcoin over gold. That's the best way to describe what I'm trying to get at here, is that, both are good forms of money. Both are valuable in terms of money. That's kind of what money should be. And if you look at both of them and you say, yeah, these are better forms of money than any, government fiat currency. So we agree with that. But which one is better out of these two? Is it gold or Bitcoin? We're not going to use stable coins because that is, government currency, but we're going to use gold and Bitcoin as the best form of money. And then if you look at the advantages, disadvantages, you may pick Bitcoin. If you're my parents' age, maybe you pick gold, and that's okay. That's okay. That's how you have to describe the situation we're in with Bitcoin. Or if someone's skeptic of Bitcoin, just tell them, like, what's money? What do you think money is? What is the best form of money? Can you give the advantages and disadvantages of gold? And can you do that with Bitcoin? And then that's how you have the conversation. If you want to get somebody interested in Bitcoin, that's how you do it. Okay. So, yeah. TrendSpider writes on X, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Warren Buffett, showing you the weakness that we have in Visa and in MasterCard. I like American Express here, guys. I like American Express. Okay, so I found this just a reminder that Chris Hone of TCI Fund Management. Chris Hone has such a large hedge fund, $53 billion, if I'm reading that correctly. And, I have written about Chris. I have definitely, I've become a fan of Chris Hone. I'm probably pronouncing his last name wrong. And he's definitely one of the goats when it comes to investing, and I guess you could argue value investing. It's going to be really interesting to see his next 13F come out here. This says, I'm assuming we're going to get his, maybe we already got his 13F. Do you guys know? But this is the latest 13F I could find, and I just wanted to show you guys, I did this whole segment on GE Aerospace the other day, and I forgot to tell you that Chris Hahn is the largest investor in GE Aerospace. Look at this, 27% of his portfolio. It's crazy that he's not even trimming it. So he owns a large investment in GE Aerospace. It tells you something there. I mean, this is so Rigatoni Capital that he has industrials. He has such a large holding in industrials, probably because of GE, right? And then I don't know the backstory between Chris Hahn and GE Aerospace. I would like to know myself. I would have to do a little more research. Obviously, he's got a big position in Visa. It's interesting that he's just holding on to Microsoft. He's just chilling. He's not afraid about no SaaS or AI disruption. He doesn't give a shit. Really like his ad in S&P Global. This is Q4, guys, 2025. So we're now in April. So I'm very surprised we haven't gotten the 13Fs came out in March. So let's see here. Please hold. Looks like we got our first 13F come over from Greenhaven Associates. So that would be the quarter one. So we're probably eventually going to start getting Q1 13Fs now. So definitely very lagging, just important to know. And so yeah, and then of course last night when I went to sleep, I wanted to listen to this All In podcast, which is an interview of the Anduril exec, who I don't even know who that is, but Shyam Sankar of Palantir again, who I guess I'm his biggest fan. He was on the All In podcast, and they were both interviewed about the state of AI in warfare and everything like that. And, you know, I was falling asleep last night listening to the podcast, and I did notice that Shyam Sankar was just repeating what he had said on the Invest Like the Best podcast with the O'Shaughnessy guy. So really didn't learn anything new there, but I guarantee you will learn something new because that's an hour-long interview. So maybe I just didn't get to the learning part yet of it, but I would definitely recommend listening to it if you are an investor in Palantir. Definitely would recommend any interview that Shyam Sankar does going forward, these long-form podcast interviews. All right, guys. So I think it's time to leave you all. Rigatoni Capital is on Substack, YouTube, Spotify, and definitely would appreciate if anyone has wants to come on the podcast as like a guest, and they are a investor and they're passionate about investing or they're in the industry. Please reach out to me directly, and I could have you come on and we can go over your portfolio and your investing thesis. If you guys wouldn't mind, please subscribe so I know that you guys are actually listening. If you like this type of format, this type of podcast, I don't think it's for everybody. A lot of people just want to know what stocks to buy and when to sell. And, you know, that's what makes a market, is that the traders, the retail traders, this isn't a show for them. But if somebody's a long-term investor and they're interested in long-term investing type of news headlines and stuff like that, this is the show for them, I think. And thank you guys for watching. Take care.